Like it or not, you are a believer in this dividend stock. The brands of this company are everywhere. You would have to be very intentional about not using one of their products in your daily life. In this video, we are covering everything you need to know about this dividend king, including all of the important dividend metrics, a look at the actual business, whether this dividend stock is a candidate for selling covered calls, and should you buy it or just throw your money at the very best dividend ETF in the world. Alright guys, we are continuing our review of all of the Dividend Aristocrats and Dividend Kings out there, and today the spotlight is on the Procter & Gamble company, ticker symbol PG. They're in the consumer staples sector of the economy, and they're a dividend king because they've been raising their dividend every single year and increasing their dividend every year for 66 consecutive years. And as you can see here, there are only 23 different dividend stocks that have the coveted title of Dividend King. This is a truly amazing dividend stock, but that's because it's a truly amazing business. So let's talk more about that. Procter & Gamble is a consumer goods conglomerate encompassing many different brands. And like I said earlier, you really have to try hard not to use one of their brands. Have a baby? You probably use their diapers. Have a washer or dryer? Well, then you probably use their laundry products. Do you ever wipe down dirty surfaces or liquids on countertop? Then you probably use a Procter & Gamble brand. Are you a woman? Well, then you probably use one of their brands. Do you shave? Then you probably use one of their brands. Wash your hair? Well, I hope so. Then you probably use one of their brands. Do you run a dishwasher? Brush your teeth? Take medicine or a pregnancy test? Odds are every American out there is interfacing with one of these products on a daily basis. We're in their annual report here, and you can see this is a very balanced company. When you look at net sales by business segment, fabric and home care takes up 35%, baby, feminine, and family care 25%, beauty 18%, healthcare 14%, and grooming 8%. And yes, they do have a large portion of their sales in North America, but they also have significant market share in Europe, the Greater China area, Asia Pacific, Latin America, and India, Middle East, and Africa. This is a money-making machine. If you look here, net sales increasing year over year like clockwork. 2020 was a bad year for many businesses. However, it wasn't for Procter & Gamble. All right, let's get back to the important dividend metrics. Current price per share for Procter & Gamble, $149.09 per share. Remember, when we talk about the most important dividend metrics, one of the biggest is dividend growth, because this is how we beat inflation. Procter & Gamble has really great dividend growth rates. The 1-year growth rate, 8.7%. The 3-year average growth rate, 6.7%. The 5-year growth rate, 5.5%, and the 10-year growth rate, 5.1%. All of these numbers beat the long-term inflation rate of 2 to 3%, and the most recent year's growth in the dividend actually outpaces inflation right now. Very few companies can say that they can do that. Now, the current dividend yield for Procter & Gamble is 2.45%, and their historical 5-year average yield is 2.64%. So this company is actually trading at a premium relative to its average historical dividend yield. But this is actually fairly common with quality dividend stocks. I would say that 2.45% is not a great dividend yield, but it's also not a terrible dividend yield, especially when we can factor in selling covered calls, and we'll talk about that very soon. When we talk about dividend safety, we always talk about a dividend payout ratio not based off of net income, but based on free cash flow, because dividends are paid with cash, and a business must have free cash flow to pay a dividend consistently. And the stability we've talked about so far with Procter & Gamble also is shown in their dividend payout ratio. The 1-year 2021 payout ratio is 59%. And over the trailing 12 months, when many businesses have been squeezed, where we've had issues in the economy, in the trailing 12 months, we're only at 66% for Procter & Gamble. We're here on the Morningstar website, where I like to get a great view of historical free cash flow. And you'll notice historical free cash flow is really strong. Since 2012 through 2022 and the trailing 12 months, very stable and increasing free cash flow per share. So again, we've got 2.45% yield. Can we increase that yield by utilizing covered calls? Now, the first reality we're going to run smack dab into is the fact that Procter & Gamble is priced at $149.09 per share. And that means you need that number times 100, which is approximately $14,900 in order to own 100 shares and truly sell covered calls. I recognize that is a massive barrier to entry for many dividend investors. This company last went ex-dividend on 10/20 of this year, which means that around January 15th to 20th is when you would need to own this dividend stock in order to be eligible for the dividend. So let's take a look at the option chain. We're in the option chain for Procter & Gamble. Let's look at two different options here. Let's look at 10 days out, and let's also look at 30 days out. Procter & Gamble offers weekly options, which is desirable for me. It gives me the option and the flexibility to sell shorter term covered calls. Here's the at the money price right around here. And remember, the closer you sell to the money, in other words, the closer you sell to the current price of the stock, the more money you'll get, but also the more likely your option will end up in the money and you will get assigned. So if you're trying to maximize cash flow now, then sure, sell right at the money, but you're giving up any upside appreciation in the stock. For me, I like to look around 20 to 25% delta. So in this case, we could look right here at a 28 delta, which means for this option, which expires December 16th, 2022, which is in 10 days, I can sell a covered call with a strike price of $152.50. This is $3.50 out of the money. In this case, if we were looking at this 28 delta right here, we can see the bid and the ask is $66.75 or 66.75 cents per share. Let's assume we could get 70 cents per share, which is right in between. We would take 0.75, and let's say we could do that 3 times a month, which I know is an extraordinary assumption. Stick with me. So that's $2.25 per share every month multiplied by 12 months, which would be $27 per share annually. We would also need to add in our annual dividend though. Most recent dividend, 0.9133, so we'll take that times 4. Let's go back to our calculator. Quarterly dividend of 0.9133 leads to $3.65 per share. So 27 plus 3.65 equals annual cash flow of $30.65 per share. We would take this number, divide it by the current price per share, 149.09, which gives us a dividend yield of 20.55%. Again, reality probably will result in lower numbers, but these are amazing opportunities. Let's go back to our option chain and let's work with a monthly option. We will go out to January 6th, 2023, which is 31 days away. In this case, we'll look at an option here that is at a 23 delta right here. The bid and the ask are 86 cents and $1.13 per share. So we'll take right around $1 even. So we'll take $1 times 12 months, which is $12 per share in annual cash flow. Add in that annual dividend of 3.65 per share leads to annual cash flow per share of $15.65. We take that number, we divide by the current price, 149.09, which leads to an annual dividend yield of 10.50%. Remember that our annual dividend right now, without selling options, is 2.45%. So we'll take 10.5 essentially and divide it by 0.0245, which means that we are over 4xing our cash flow by selling covered calls. It's not a perfect solution, but it's a great way for the average Joe investor to maximize cash flow. And depending on what delta you use, an opportunity to grow the price per share as well. Does it make sense for you to own Procter & Gamble in your own portfolio? Procter & Gamble has a great dividend growth rates. They have a very safe dividend, and they're a company that's been raising dividends now for 66 years, and they have a great business model with brands that everybody uses on a daily basis. But one of the biggest ways to increase cash flow from 2.45% to 10 to 20% is by selling covered calls, and many investors may struggle to get to 100 shares because it would cost about $15,000. So this might not be a good fit for you if you don't have the ability to open up 100 shares. But that doesn't mean you can't own Procter & Gamble in your own portfolio. It's a solid dividend stock. But at 2.45% yield, unless you've got a ton of money and you don't need a better yield, it might be tough to generate enough cash flow just with the dividend you're receiving. Given how this company is integrated into every part of our lives though, it's a great hedge when the economy goes sour. So if you're looking for more cash flow, a better dividend, and you can't get to 100 shares, maybe the best option is just to buy SCHD, the very best dividend ETF in the world. Current dividend yield for SCHD is over 3% at 3.14%. It's got a better dividend growth rate than Procter & Gamble, and you get 100 dividend stocks as opposed to just one dividend stock. One thing you should know though, in case you already own SCHD, is that Procter & Gamble is not part of this ETF. It's not one of the dividend stocks in the portfolio. Make sure to leave your 2 cents down in the comments below. Did you find some value to this video? Did you learn something new about Procter & Gamble? Are you a current investor in Procter & Gamble? Remember that I respond to all comments and the day that I post a video. That's all I got for you guys in this video. Have a great rest of your day, and thanks for watching.